Hi, welcome to a short series video number 4. And this is Denjola from 19 Finance, and we are talking about what is lender's mortgage insurance. This is just a continuation from video 3. However, I've just made a separate video for lender's mortgage insurance because it's pretty most it's a very highly discussed topic, and there is a certain amount of cost involved in this, and everyone wants to see if they can save on this cost. So just a separate video for what lender's mortgage insurance is. So let us start off with what it actually means. So this is an insurance that you need to take if you have less than 20% deposit. So let's say you've got let's say you bought a property for $100. Again, the previous example, it might be a small toy property for $100. But if you don't have a $20 deposit and you've got only, let's say, for example, 15 or a 10% deposit, you'll need to pay what is called a mortgage insurance. So if you borrow more than 80%, that is when you'll be charged this fee. How much does it cost? It depends. It could be anywhere between 1.5% to 4% of the property price. It depends upon how much you're borrowing from the bank. So the more you borrow, the higher the mortgage insurance cost. So when we have a discussion and when we make an estimate of cost, we give you an indication of what the mortgage insurance. It's also very interesting that different banks have different mortgage insurance. There could be a difference of around $3,000 to $4,000 within banks just for the mortgage insurance cost. So that's something we'll look into it for you as well. Okay. Um, in terms of LMI, it also makes sure that these costs are not covering you this insurance is not covering you, it's covering the bank. So we got to understand that we'll cover in the next slide here as well. Okay, so I think we'll take into the good to know facts about lender's mortgage insurance. So it's a one-off payment. So lender's mortgage insurance is a one-off payment, as I said, anywhere between 1.5 to 4%, and that will be added to your loan. And then it's paid off. Let's say your loan is a 30-year loan term, it's paid off over 30 years. So that's a one-off payment. It covers the bank. LMI does not cover the customer, but instead it covers the bank in case there is a issue in the future. Let's say the client defaults in the future, the mortgage insurance is cover the banks, and they help the bank to make the repayments. Okay. However, look, though there is a cost involved in mortgage insurance, and people say, "Oh, why should I pay mortgage insurance?" We normally call it an opportunity cost. So it lets you enter the market quicker with a smaller percentage of deposit. So let's say you were to save that another 10 or 5% deposit over a period of 3 or 4 years. The property market might have gone up by 10, 15, 20%. Then instead of asking you to save further, so that we call it the opportunity cost. I think the waivers and promotions, I did cover it a little bit again in the previous video. So there are instances where the mortgage insurance is waived off after 90, some cases 95 as well, for doctors and lawyers and nurses. So the banks feel that these professions are very secure, and they can't go wrong in their employment. So they tend to give you some LMI waivers. Some banks, as I said, up to 85%, you don't need to pay a mortgage insurance. But for any of these discounts, because it keeps changing, do get in touch with us. We'll try and see if there's any way to, waive off your mortgage insurance. If not, we'll try to also to see which banks provide you the least possible cost into the mortgage insurance, and we'll guide you accordingly. Okay, and thank you very much for watching again, and hope this was useful. See you in the next video.